We're about a month before the election, and there's three scenarios that could potentially happen. The first one is a Clinton victory with the GOP House. The second is a Trump victory with the GOP House, and the third scenario is a Democratic sweep. Now, based on history, the markets are going to favor scenario number one, a Clinton victory with the GOP House. It's not that the markets favor Clinton over Trump, it's just that the markets have historically favored gridlock versus a unified government. And it makes sense because with gridlock, nothing gets accomplished. The status quo will remain, and you have a lot of visibility over the next 4 years. There's not going to be big tax increases or decreases, and there's not going to be big industry and sector reforms that could impact profitability. So both investors and corporate managers feel better allocating money. With the Clinton victory and a GOP House, that's going to be positive for markets, and that's the very scenario that the markets have been pricing in really since August. In this scenario, you're not going to see big regulation changes for healthcare, energy, and financials. That's why those three sectors are going to be the most impacted come November. You're also going to see defense and infrastructure firms benefit. Both Clinton and Trump have been campaigning that these are areas that they want to spend more money and devote more resources towards. You'd probably see tax increases. Estimates have it at over $1.2 trillion over the course of 10 years, but those tax increases are roughly going to be offset by spending increases as well. In this scenario, you most likely see a market sell-off initially because the markets aren't familiar with Donald Trump. But based on his tax plans, you'd probably see a higher market looking out 12 months from now. In his tax plans, he's going to be cutting taxes for both individuals and corporations. The individual tax rates would be brought down to 12%, 25%, and 33%. That's going to put more money in people's pockets, and since the U.S. is primarily a consumer-led economy, that should boost GDP growth. But you're also going to see business taxes come down. Business taxes are going to come down to 15%, and it's going to make the U.S. a much more friendlier environment to operate in. So businesses are going to move back home, creating jobs. This is good for the economy as well. But his tax plan cuts two ways. Conservative estimates have his tax plan increasing the deficit from $3 to $5 trillion over the next 10 years. So it puts the U.S. on a more unsustainable path. Because of this, you're probably going to see dollar weakness, but you're also going to see higher treasury yields, because there's going to be a lot more of them coming to market. Whenever you have a lot of supply of something, the price needs to reflect that, so you see lower bond prices and higher bond yields. In the Trump scenario, this would be most beneficial for energy because both Donald Trump and the Republicans support the American energy revolution. You'd also see healthcare and financials be big beneficiaries here. It would weigh on multinationals. Because of Trump's talk about trade and some of the protectionism measures that he's mentioned, trade would probably be impacted. You'd see potential tariffs on goods coming into the U.S., but that also means trade retaliation for countries importing our goods, which would impact multinational valuations. Under this scenario, you'd probably see higher taxes, which could weigh on multiples. It would impact healthcare, energy, and financials also because you'd see tighter regulations. With tougher regulations there, that impacts their profitability, which would weigh on market multiples. Clean energy would be the big winner in this scenario. Just 2 weeks ago, this was a 10% probability. It's up to around 25%, but again, that's a 1 in 4 chance. It's not our base case scenario.